All right, good morning, everybody. It looks like TradingView has issues this morning. So if you're um, if you're trading on TradingView and it's giving you a fit, it's not you. So just kind of take it in stride. Every every broker, every platform at some point has issues. And today seems like is the day for TradingView. And it was working now, I don't know, a good 30 minutes ago, but it's not working now. All right, so every once in a while, it seems like I need to remind people, or even just, for newer people that hasn't heard this yet, what the goal is or the purpose of these morning briefings. I don't do these to give you a leg up and prepare you for the trading day. That's just a byproduct. You happen to get that as a part of what we're doing. But the goal here is to teach you how to do this for yourself so that you don't need to go and get a morning briefing every day. You'll know how to do it. I've tried to make videos on this. I've tried to teach this. There's so many parts and pieces to preparing for the trading day that any video I've ever tried to make on this just turns out to be this really long, drawn out video, and nobody wants to sit through hours and hours and hours of video. So I really came up with the idea that the only way that I could do this effectively was to just do it live every day and show you guys how to deal with things that come up that, maybe wouldn't be a part of the normal scene, and just having a routine and an approach. And then, of course, there's people that trade so differently than me, penny stocks and whatever. You're going to need your own routine that doesn't necessarily do all the steps that I do. This is just a good guide. So when I'm going through these steps, if you notice by now, I kind of do the same thing every day, right? I might change it up a little bit or put it in a different order a little bit, but for the most part, I'm just hitting on the same pieces to the puzzle, the same thing every day, again and again and again and again. That's the whole idea. So one of the things that I want to mention is resources. When you're newer to trading, it seems like everything costs money, and you don't know what you need. So you're trying to avoid buying a bunch of everything, but it starts to stack up after a while. So I like trying to approach things from the idea that there are really great free resources that you can get your hands on, and these free resources can lead you in the right direction without you having to spend a lot for it. And of course, you do get what you pay for. So if you were to go out and buy different things, the things that we can add to our morning, then it would be even better, but you don't necessarily have to. So with that in mind, what we're looking at here is Twitter. On Twitter, if you were to search for T1 Alpha, you would get this Twitter page. You can sign up for a free email from them, and this email is absolutely amazing. It's got all kinds of great content in it, and it's completely free. I'm trying to remember if these guys have ever sent me an email that wasn't this morning briefing, like spam or anything like that. And honestly, I can't remember one instance that they've ever sent me junk or spam or tried to get me to buy anything. Nothing like that, right? So they're not selling your data, they're not selling your name, they're not sending you crap. They're just sending you this morning report. And it's an amazing report. So if you're not reading that every day, you're handicapping yourself right off the bat. You're missing out on something that we all know and you don't. So that's definitely got to be really high on the list. And it's free, man. I mean, I like free. Another one is the brokers. So we're looking at TD Ameritrade, but it doesn't have to be TD Ameritrade. I've got an account at Schwab, Fidelity, TD Ameritrade, E-Trade, IBKR. Every one of those brokers have something like this. It's this morning dashboard that shows you what's been happening in the overnight hours, what they're looking at. And later in the morning, they're actually going to put trade ideas on here. Even those trade ideas are on every one of the brokers that I mentioned because they're not coming from that broker. They're coming from these sources, CFRA and a few others, right? So this is where you can do benchmarks against the sectors, see who's been doing good and who's not so good, who's getting more flow. You can check the headlines from around the world, do a deep dive on those sectors. You really break that down and dig deep into, if we just say communications is doing good, well, okay, but that's kind of broad. What part of communications is doing good? And you can use this tool here and really dig down into each sector and find out what inside that is bleeding or, is ripping. It also does a market review. So when the day is done, come back here, there'll be an article that talks about what moved the markets today. And most of the time I've got an idea of what moved the markets, but there's sometimes where in the middle of the day, the market makes a really drastic move and I can't find anything that explains why the move happened. So when I go looking at the end of the day, this is one of the places that I stop at. And again, it doesn't need to be Thinkorswim, right? Any of the major brokers is going to have something like this. So in that overview, if we were to scroll down here a little bit more, there's some PDF documents that come out, right? These CFRA 5-star stocks, insider trades, market edge, and all of those are free. And then of course, it does have those morning trades also. It's also, it's a good place to see, who's got earnings, who got analyst upgrades, analyst downgrades, all of that stuff. So another really great resource is your broker. And notice I'm talking about Thinkorswim or TD Ameritrade, but I'm on the actual website. I'm not on Thinkorswim. Now, this Dow Jones North American morning briefing, you can get that on the Thinkorswim platform. You just go to SPY, open up the news and scroll down a little bit and you'll see two of these because it's so big they put out two different pieces. Then there's the ticker tape. This has a futures, how to, preparing for the morning with a futures perspective. It comes in a little late for my taste, but there is a morning article here too, kind of preparing for the day. Morning futures briefing right there. So when it comes to resources, you have a lot out there that you don't have to spend a ton of money on. You're listening to me in the morning on the morning briefing. I'm free. I'm not charging you anything for these morning briefings at the moment. I don't know how much longer that's going to stay that way, but for now, right, it's just another free resource. So those are some of the free resources. Bloomberg's 5 things you need to know is another one that you can get for free. It doesn't cost you anything. You just go to Bloomberg, sign up for the email. Reuters has one. Morning Joe is another one. Or Morning Brew, excuse me, Morning Brew. they'll send you an email. That one has a little advertising in it, but it's not like clickbait junk, right? And you don't have to click on any of it. All right, we got a lot of Fed speakers today. A lot from the European Central Bank, and then Bank of England, and then US. We have Tesla earnings today. I was listening to the data points on Europe this morning. They came in hot again. Um, I have lost track of how many inflationary data points over the last 10 days that I've seen in Europe that are hot, but it's enough that it got my attention. We also have the 20-year bond auction today. That's a big deal. And we have EIA crude inventories at 10:30. You can trade the USO for that, right? So at a few minutes before 10:30, bring up the USO, kind of prepare, look at the options, evaluate what you want to do. And then when that EIA report comes out, you could perhaps anticipate a small play. It's not like we're talking about USO, making a dollar move or, $1.50, some big sweeping move. It's not that good. Um, but oil and crude and energy in general can absolutely move the market. So if you're not trading this, still keep your eye on price. Say if you're doing the futures, because we can completely change direction after this report comes out. If we're, bouncing along the lows or kind of maybe tagging across the highs, and then this report comes out and flips everything over, and away we go. We got beige book too, but I gotta say, I mean, that one's a lot lower down on my radar. Bring it over to uh, FX Street, since it will rank these for us, and we can kind of get a feel for, the anticipated impact. We can see a lot of these Fed speakers are, going to be their own little mini fire bombs. And like I've said before, when you have a speaker, try to dig down into it and see where they're speaking. And even if they're speaking live, because a lot of times it'll show that there's a speaker, and then we find out it's just some recorded message. And I mean, that's very unlikely to have any kind of impact that'll rock the market. Usually it's those gotcha questions, and it's when they're, chewing on their own toenails, when they screw up and say something that either they shouldn't have said, or they just put it out of context and surprises the markets. So some recording isn't going to do it. Speaking at, Girl Scouts of America isn't going to do it. Some luncheon somewhere. So where they're speaking and what they're speaking about often has a lot to do with whether we believe there's going to be any impact or not. All right, here are the spot gamma levels for today, starting with the NQ on the far right, and then the QQQ, the SPY, and farthest to the left is the ES and the SPX. I was going to import those into the indicator on TradingView, but TradingView is still giving me issues. Sky issues. I did re-up on my stock charts account. That's where I do sort of the bigger picture, the swing trade, and the longer term buy and hold investment stuff. So once I get all my charts set back up again, I'll be very likely coming back out with the afternoon market review sort of thing, the longer term swing trade stuff, and even just, you know, the buy and hold stuff too. Sort of that broader market breadth, bigger picture. All right, so we can see the volume is in line. We really don't have a whole lot here to cause us concern. No market maker move. The volume's not overly heavy or overly light. So we can turn that thing off. It's just taking up real estate. After 10 o'clock yesterday, 10:30, we really had nothing for the rest of the day, and the range just got tighter and tighter and tighter. And then when we got into the Globex last night, that is a very, very narrow IB. Now we did finally eventually expand out, and look at that move at 2 o'clock from the kill zone between 2 and 4. Those are the two biggest candles. Maybe this one here at 5, right? And that's when pre-market trading starts, but definitely 2 through 4, which is the kill zone. Big moves, big swell in volume. Finally got that leg down that we were looking for, and we broke this zone now. So we're inside day breakout, thank goodness, and we're not stuck inside of yesterday's trading range. I will bring in a little note of caution. We had generally the same thing yesterday, only it was the other way around. So yesterday we had that really tight initial balance, and then we had that inside day breakout to the upside, and everything was looking, kind of bullish. But I warned yesterday, right? I warned you. Can't say I didn't warn you. Down we went. So here we are this morning in the exact same situation, but inverse. We had a really tight IB. We expanded down with an inside day breakout, and we've now set a Globex low, just like yesterday when we had set a Globex high. It was at 630. This low is at 6. So, it's not perfect, right? But it's pretty close. It's the same thing. And it really is like a game of mahjong. If you can recognize the current day and then apply it, look back to a day that you've seen before, you kind of got a roadmap. This is not going to be exactly like yesterday because it's an inverse day so far. And, that kind of just throws everything into a tailspin. A little note of caution, right? We're only down 0.5%, which isn't much of anything. We do have an MDP. That's a missed daily pivot. Since we've opened, we haven't hit it. We've been holding underneath it, and at least from this point so far, it doesn't look like we're going to hit it. Yesterday, that's as far as we made it, right? That move to the downside, we stopped right at the daily pivot, and that became our structure for the low of the day. It very likely wasn't what held up the market, right? So we don't want to look at it from that point of view. It wasn't support, or it doesn't act as resistance. We are really close to a ADR half, which is 41.51 today. So if we look in the upper left corner, we can see a 21-day ADR is a little more than 1%. I think 3 months ago, we were sitting at like 1.5, 1.7. So it's really come off. The ADR half is not support or resistance or anything like that, but it does tie in kind of close to that Monday's low. Below that, we got the full ADR at 41.26. 4150 is one of those levels, right? One of those spot gamma levels, tier 1 alpha levels. It's a gamma strike level. Now, this is the ES June series, and we're still a long ways from June. So the ES and the SPX isn't going to line up too tight yet. So we'd want to, evaluate the numbers on the SPX individually as a standalone rather than trying to just move the decimal over or do some sort of calculation or formula. $10-day, 30-minute volume profile. When we're at the low, we expect to go to the high. When we're at the high, we expect to go to the low. I did mention that yesterday, by the way, when we were sitting up at 4,200. When we're at the high, we expect to go to the low. And so far, that's what we're working on. You can see this longer term angled trend line has been broken. And we're legging out of it reasonably well. We still have the point of control down around 4130, which is a cog line, COG, center of gravity. If you go to Google that or search for that, John Euler has a thing that he called cog lines as well, but that's not these, right? That it's a completely different thing. This is forming, a bit of a rising wedge, and rising wedges break to the downside. So it's not a surprise that it's what we're getting, right? Then to identify how far we could go from the breakout, measure the wedge at its widest point, and then put that measurement at your breakout point, and that would give you your distance. Now, this is a full measure, and what is recommended in the technical analysis books is that you aim for 50% of that first, and then if it continues on, then you go for 100%. But more often than not, 50% is all that's made. And I have seen some analysis books that recommend using the highest point of the wedge for this breakout down. So the last touch across the high, that's where you start your measurement on the way down. I'm not sure if I really like that, but I wanted to throw it out there because I've seen it in more than one book. So, it's not just some random thing. More than one analyst has done it this way. And really, if you think about where that sets this line, if we were to put it back where it was, I mean, that's kind of 50% of the box anyways. So it comes out to be about the same, right? Kind of, maybe. Yeah, whatever. So we did take out that VPOC in the overnight hours. We can go ahead and take it off. We do have, I should have kept that line. We do have a VPOC from yesterday that we can now carry forward. $41.79 and a half a point. Now, if I was to really zoom in on these point of controls, you can see that it's a wide area, right? There's the top of it, and then there's the lower part of it. And it doesn't line up with the ticks. The ES doesn't go to 4158.13, right? That's not even a thing. So don't stress too hard on where you put that point of control, right? Because it might not line up exactly with where that is. If we do start making a move to the upside this morning, we can see that the low of yesterday has a lot of volume here in the Globex this morning. So that's going to be a price shelf or an area of difficulty to get through. So not only is it a pivot point when we look at yesterday and recognize, oh yeah, that's the low of yesterday, we got to watch that area, but it's also all of this volume here too. And I bring that up because I continue to mention constantly, liquidity resides on the other side of the pivot. Right? I'm gonna just keep saying that till it sticks in your head. So when you're focused on a pivot point and you're trying to get a trade and it happens to be, oh, I don't know, yesterday's low, when price is running up to this level, don't just put your order on the dome right at that level and then cry about it when it misses you, stops 3 ticks away and falls down and you're not in it, or runs you over, stops you out on the other side and then falls back down and you're not in it. Liquidity resides on the other side of the pivot. They're either going to front run this thing and they're going to stop it early, kind of like they did right there, or they're going to run it all the way through that thing and get into the liquidity on the other side. It's going to be one or the other. It still seems like the market is waiting on something. Even with this leg down and this move this morning, it doesn't seem like we're done yet. And as I was looking through the data, there's still no report that's come out that makes me believe that the market is done. So all of that choppy sideways, just kind of holding the line thing that we had yesterday, I would expect to see more of it again today. I was going to bring up the yields, but with TradingView down, can't really get into all of the different. I wanted to look at the 2-year. We've got some good moves on the 2-year today. And then, of course, looking at how we did over in Asia and what the day in Europe looks like so far. So looking at crude here, kind of zoom out a little bit. We had that nice rejection off that 83 area, 84. I am short in USO. I put that trade on the end of last week, I think. Now I have to check my notes. But I'm not in a directional short, right? More of a bearish neutral. It's a call credit spread. I took it at the money. We're not expecting, long-term weakness here, just a resolution of this high, maybe coming back to the low, or at least coming back to fill that gap at around 75. All right, so looking at Europe with that really nice run, I mean, you got to admit that is just amazing. They are inside day breakout now to the downside, which, makes complete sense because it's probably their fault and the reason that we're down this morning. And then looking at Hong Kong, they came off of that high that we have been talking about with all of this sellers defending the level. We had just pulled back off of it yesterday and we're hovering, but we did get that solid breakdown today. The thing is, we're still inside of this April 17 candle. So even after all of that pullback, Hong Kong did close inside the zone. And as I zoom out, they've been in this 2-week range, just like we have. That looks very much like the S&P, right? That same box of chop, as opposed to Europe, which had just this absolutely phenomenal run. The thing is, like I mentioned, they've got a lot of data coming in, really hot inflation data, and the market does not like it. You know, looking at like 9% over there. Oh yeah. Yeah, you like it. All right, so we do have that Marbozu candle this morning, right? No wick across the top or the bottom. Bearish Marbozu. And this is a wedge pattern, right? Even just this much. We've got that rising wedge. Rising wedges break to the downside. It's sloppy, but get the point, right? You want to measure that distance and then plot that distance with 50% and 100%. The Dow is a lot closer to a breakdown than the S&P. Certainly something worth keeping your eye on with the Dow. This big candle is that April 13 is the same as, you know, the April 13 one here. The thing is, we're a lot closer to, you know, resolving it in the Dow, especially since the 14th is all we really got to struggle with. So if we can get an inside day breakout of yesterday, then getting through these levels should start to pick up speed. So on Thinkorswim, we can look at the 10-year, but the 2-year is the one that I wanted to talk about this morning. I had some pretty good size moves in that thing. We did get contract change in VIX, so we got this really big gap. Don't treat this like a regular gap, you know, like looking at it and saying, oh, you know, it's going to close the gap. Probably not. And on Thinkorswim, I did go in and try to do the contract settlement thing, right, where you can go in and adjust for contract changes. It didn't resolve the gap, so it's going to be there. It's not the first time we've seen something like this. Maybe in a few days it'll get wrapped up and then like poof, suddenly there's no gap again. All right, so we got a really nice bear flag this morning. It's very clean. We can use the 786 as the pullback level. It did overshoot the 786 this morning, but as you can see, that 2-bar reversal, like a tweezer top, and it was right against VWAP. All right, so we're getting a little discrepancy between mega market cap tech, your FANG names, and the financials this morning. The S&P has this little micro double bottom called, think of it like the H pattern, which is a bullish pattern, by the way. H is here's a little phrase, it's not mine either. H stands for hell for shorts. Peter Reznicek says that all the time. So it's his phrase, but still it sticks in your mind, right? This H pattern is not bearish, it's bullish. But we didn't get that H pattern on the NASDAQ because we don't have that micro double bottom down here. It didn't get weak enough to complete the rollover and come back down again, right? So it's something to consider is we're getting those mega market cap tech names with a stronger bid than the financials at the moment. So we got yields up, bonds down, stocks down. The VIX, I mean, it's slightly elevated, and that's how we want to look at it. The VIX is slightly elevated this morning. We don't want to look at it and be like, oh, look at this huge gap. Look how much we're up in the VIX this morning. We're not really up that much, right? We're only up from where we opened to where we are now, just a little bit up. And you're only going to have to deal with it like this for like a day or two, right? And once the market opens anyways, just swap over to the VIX and don't even worry about it, right? Whatever. It's good. So I don't know that we're going to see the H pattern get completed in the NASDAQ. It does seem like we're testing that VWAP really nice. Getting through that VWAP is going to be the first thing that we want to focus on. After that, it'll be getting back through the pivot points, right? Getting back to the Globex open, then very close to that, the Globex high, and then that really tight zone yesterday. For the NASDAQ, it was 13,200. That'd be the level that we have to get above. And I mean, and you can see it in the NASDAQ very clearly, that solid line at 13,200. They were either front running it where we didn't come up and hit it, or we came up and shot through it and it got defended and we came right back down again. You can see that defense really clearly, right? That front running that I was talking about earlier. Liquidity resides on the other side of the pivot. Pretty soon you'll be saying it with me like a mantra. So the level or the zone is not so clean in the S&P. The one that I would focus on would be more up here around this 4180, maybe 4185 area. It'd be the same thing, front running, and then overshooting. We do have some holidays coming up. Not us, right? But I mean, like, we do have global holidays that we need to be aware of. For Europe, May 1st, May 8th, they're both Mondays. They're going to be closed. So that it's going to affect our mid-morning on Monday the 1st and Monday the 8th. Europe closes at 10:30, and it very often changes the shape of our trading day, right? So on those two Mondays, it's going to be a little different because, well, they're not going to be closing that day. They're already closed. And then May 3rd, 4th, and 5th for Japan is going to be closed. That is going to affect you nighttime traders who, are trading the Asian Open, because there won't be an open in the Asian markets to shake you up. All right, so we're looking at the dollar here, and on the daily, I kind of wanted to get this point across. Look at the days that we've had here in the dollar since around mid-March. Tell me that isn't the weirdest thing that you've seen in a while. And I don't have an answer, right? I don't know what to do with it. It really stands out. I mean, this really gets my attention when I'm looking at this and trying to figure out like where did I see this before? And what do we do with it? Otherwise, we do have a trend line overhead to deal with. We're coming up a little shy on that. And a solid level down below. I'd call it 41 and a half, 101 and a half. So we need to consider the impact of the dollar finally getting back above that 102 and getting a trend line breakover. It's a TRB setup. This was a really nice reversal recovery in that breakdown, but there just was absolutely no follow through. So we're kind of looking for that follow through, and we could see it today, right? We're seeing already that in the pre-market, we're up to 102 and a little bit extra. The dollar and the bonds opened after 8 a.m. They open early compared to the ES and the NASDAQ. So this is going to be open in a few minutes. It'll start to show up on the daily. Heck, that could even be that daily candle already, right? I never trust Thinkorswim on a daily chart until after 9:30. But we're going to be looking for the dollar to really start to expand today. And remember what we've talked about recently, that it's not a tick for tick inverse relationship. So when we see that dollar going up or we see it going down, we're not immediately trying to trade against it in the ES or the NASDAQ, right? Instead, it's going to be levels or zones. So for the dollar, notice that it failed to break out of this high from back here on Monday. Right now, that's the line in the sand. It's going to be that 102 that we were talking about, but a little bit of extra thrown in there, right? So 102 and a quarter, something like that. If we get above that level, it's going to be a really big deal. And the next level is going to be all the way back down, back here. We'll call it 103, just some round numbers, right? We can see that when we take it back to the daily. So right around that area, see how it lines up. So now we've got our structure, our box or our zone to kind of deal with. Today, we're looking to see big, fast moves in the dollar. These grindy days where we're just really not doing nothing, say like yesterday, no big deal. The dollar really didn't do anything. But on a day like Monday, or, say that Monday there, those are the days where we really start to see an impact in the market. So watch the dollar for these key levels, but also watch how the dollar is moving. Is it big candles and fast action, or is it just a grind? Because the grind really isn't that much of a threat. And since we're still in the pre-market, the TNX, it's not going to be useful, but we can still use the futures. So 10Y. On the daily, we can see we had this kind of a cup pattern We're now back up to the top of the cup. We have to be a little bit concerned about a handle. So a pullback. Pullbacks can form 1/3 the size of the cup, and it wouldn't be considered, too much. Otherwise, we do have a lower trend line. And if we use our drawing tool, there's that R line, the regression line. Just start it on the lowest day and move your mouse all the way to the right. It'll do the rest. So there's your price swings. We're kind of completing the upper end of this swing. We're looking for this to pull back a little bit. So on stock charts, they went through this little bit of a write up on intermarket analysis, right? And it kind of digs down into um, Murphy and a couple other authors and their approach to looking at different things and then putting all the pieces together. So they had this great section in all of that that talked about inflationary and deflationary relationships and the correlations that we can use between, say, stocks and and bonds and commodities and the FX markets. So it's a good read if you wanted to go over to their to stockcharts.com, go into their chart school, which is free. You don't even need an account. You don't have to sign up. Just search around for, say, correlations. It should bring up this article. So it's a good read. Kind of gives you an idea of things to look at and the relationships to look for if you believe that we are starting to see a deflationary impulse or an inflationary impulse. With the 10-year getting below 3.3, that would be a deflationary impulse. So it looked like we were going to finally get that and break down. Instead, we came back up. Now we got to start looking for, the opposite side of that, an inflationary impulse. But it's not like, well, we just crossed the line and now we're going to get this impulse. It's more of a weekly close and the bigger picture, right? And then how fast this thing is making moves. So doing all this work with the chart, drawing out the levels, identifying, pivot points, support and resistance, that's one thing. And it has a lot of value. But really just stepping back and asking the question, how much is it going to affect the markets when the yield is above, say, 4%, right? And we're looking at the 10-year, but what about the 2-year? And how much is that going to affect things when the 2-year is taking off again? So with the 10-year here, the pivot point that we want to focus on is this 3.65%. We really don't want to see it expand beyond that today. And we're at 3.63%. So, we're right there, really close to 3.65 this morning. It's not that far away. That's going to get us above this wick here, this pivot point, and it's going to be the start of a little bit of concern. There's not a whole lot more beyond that level that could slow this down, right? And then of course you got to kind of ask the question, well, what's causing this thing to move around? And is the cause done yet, or are we going to get more? Because it's not moving in isolation, right? Something's driving this thing. All right, so there was a lot of talk about Bitcoin yesterday, getting back up around that 30,000 level. But as we can see this morning, that took a beat down, and we're back to the lower end of 29. We can see the trend line on the daily. It's what we hit this morning. We got a quarterly level there, and that's what we hit yesterday and today. So at some point, if you keep kicking the door, you're going to get through it. Persistence beats resistance. So the more times we keep coming up and hitting this thing, the more likely it is that we're going to break through it. So then we can look at all of this and kind of approach it from a measured move standpoint. %50 would be the low end of 28K. 100% of the move would be really close to 27K. And that would put us basically at the top of this candle here. And that candle would be the boss if we get back inside of the range. Who cares, right? Most of us aren't trading Bitcoin futures. I would say probably none of us are trading the Bitcoin futures. The buying power restrictions in this thing is massive. But we use it for a liquidity tell. It's also a sentiment gauge on risk. If everybody wants to take risk, because risk is where you can really monetize, then this is a great representation of risk. Also, when this is moving and it's bid up, it has a correlation with the NASDAQ greater than 70% right now. So if this is bid, so is the NASDAQ. It also has a correlation with semiconductors. Because if we look inside that basket of stocks that I got from the Smalls Exchange futures product, inside that basket was a lot of semiconductor names. So if this is down, we have to anticipate that semis are going to be down. And then, of course, fun names like Riot, Mara, Coin, they're going to be down. And after that really big gap up and drop down, look at that defense. What a beautiful reversal, too. There's every expectation that we can at least get back down to April 17's low here. At the minimum, we can get that, right? But one step at a time, we want to see the gap closed, which we can see in the pre-market, it already is. Then we want to focus on the open from yesterday. And then that low for Riot. I like playing in Riot as a day trade, as a fun product to trade. All right, so BITO down more than 3 1/4. Gold is also down. Typically, it would be US dollar Japan up, gold down. But we're seeing this reversal here, at least since 6 o'clock this morning, with the US dollar Japan headed to the downside. Let me just check to make sure that. Yeah, all right. I was on a tick chart and yeah. So we did get this nice sell-off from the 135 rejection. Not a surprise, right, on that rejection. But we're not seeing the follow through with this going down. We should be seeing gold, silver, miners, precious metals going up, and we're not seeing that, at least not yet. That might be a nice play for the day, right? We can see it starting to turn around there. That reversal matches the reversal in US dollar Japan. So that might be a nice play for today. GLD, precious metals, silver, miners. So really, we didn't start to see the reversal in gold until this last leg down once we got below that pivot at, say, 134.70. But we did finally get that breakdown, and we're starting to see the reversal now. So at the very least, we want to see US dollar Japan not rally back up. I think that alone, just the fact that it's not putting negative pressure on precious metals, should give the precious metals a little bit of a boost or some freedom. Just got to be careful because we did break this lower trend line in GLD. Oh, excuse me, I misspoke. We have not yet broken it. When I was eyeballing it, it looked like it had broken. So kind of a line in the sand here that needs to hold. Otherwise, we're coming back down to this pink line, 178. We now have a TRB setting up for the other side. So if you're someone looking for confirmation before you get in, breaking above that trend line would be your confirmation. IBD would call that your early entry, right? And that is like, there you go. It's a little bit better that way. So this is where IBD would mention getting in, right? If they had put out an alert on gold, that's where they would say to do it. Otherwise, you'd want to wait for it to get all the way up here and break out. Me, I like getting in down here. You don't have confirmation yet. You will lose more often if you get in when it's down here, but the losses are the least that you can get when it's way down here. And I'm not trying to keep score on how many times I win and lose. To me, it's more about how much did I lose and how much could I win. This is the lowest risk that you could take right there. It's an LRE, low risk entry. Of course, it only is going to be a low risk entry if you actually manage your money. If you take that entry and then you don't manage the trade, if it starts to go against you and you end up with a big loss anyways, it wasn't an LRE for you. You mismanaged the trade and took a big loss. All right, getting the same reversal in GDX. The numbers are going to be different, but it's the same approach. Silver's actually been doing better than gold, right? I might have misspoke on that, but it's been doing it as well as, let's just say it that way. And you can see this morning, the recovery already is much stronger and much better than gold, right? So there's that approach. It could take this direction, and it's cheaper too. You know, if you were wanting to do a mix of stock and options, which is where you can really kind of maximize things, you know, trading in the cheaper product might help. If you don't really have a preference one way or the other, and you're like, yeah, I could do precious metals. Which one? Gold, silver, you know, the miners. What do I don't know. What you might want to do to resolve that wishy-washy kind of I don't know thing is look at the liquidity and see which one of these has a better liquidity that suits you, depending on the time frame that you're going to use, your days to expiration, who has the tighter bid-ask spread, who has more strikes to deal with. And when it comes to strikes, keep away from this, right? All that bag holders, that's just trash. Those are suckers who got trapped and they're just hoping somebody comes and saves them, right? Same thing over here. All of these strikes, they're just trash. It's bag holders. There's just nothing there. So, you know, if you're trading some strategy and it's telling you to use like a 10 delta or 12 delta, don't just by default go in and trade that delta. Look at what you're trading and see if it makes sense, because those rules, they're just broad guidelines and they don't fit all markets in all environments and all conditions. Blindly trading a delta level or a data expiration, the strategies that say go 30 days out at a 25 delta or a 30 delta, and they're blindly putting on the trade just because it meets those time frames and metrics without looking around, it's a bad idea. Right, so as we can see, and as we would expect, the VIX is up, yields are up, the dollar is up slightly, not much. And tech this morning is doing better than finance. And it does look like we're going to get an expansion in yields. That would be the big thing that I would be watching today. How far do yields go if they start making really big moves like we saw earlier this morning during the kill zone? If it makes another really big move up like that. And same thing with the dollar. If the dollar starts making big moves. Otherwise, watch the clock. Be careful, be safe. Keep your eye on Finance Juice today. We got a lot of speakers out there just chipping teeth, and I still don't see a consistent message or theme, and they're going to need to work on that, right? And I expect them to. Plus, we're going to be coming up into a blackout period soon, so they're all trying to, put in their final notice, and let's say their 2 cents worth, right? They're putting in their perspective before they go into blackout mode. I'll see y'all tomorrow.